All right. So, thought for tonight's class, what we should first do is review past trades. So I'll go through my three here. Then Samson, you rip through your trades for the week so far, the last few days, whatever you've got, really. And then if anyone has any questions, throw it into the chat, please. And then we can review any other topics, material, whatever that you want to review. I think there's some other stuff that we can still go over for new people as far as like just we can go over like vocabulary terms. We can run through that one. But for this was yesterday, Wednesday's long on NQ. We had a bullish SMT. So, as you remember, a bullish SMT is when either index sweeps a certain side of liquidity and does it more so than the other. And so what happened here, it was a small SMT. I'll be honest, it was a small SMT. But if you look, right after morning open and right at about 10 a.m., which is actually about right where I entered the long, right? 10 a.m. for a 10 a.m. reversal. Because remember, 10 a.m. is a remarkable time for the market to change direction. You have a lot of candles closing, that 4 hour, the 2 hour, the 1 hour, the 15-minute, the 5, the 1. All these candles are closing. Lots and lots of data, and you've been 30 minutes into market open. So, by then there's been some type of manipulation, liquidity sweep, and then it's going to distribute out to the other side. And so it did exactly that. Market opened right at 10 a.m. We had a spike down. We swept the sell side liquidity. If you see right here, this golden box, this is a bullish fair value gap way out here to the left, way over here. This was that was Friday's Jerome Powell news announcement speech candle. And so what happened was we came in just by a few points. Now there were wicks below, but what happened was we came all the way down, we threw some bullish gap, and then we wicked into this gap just a little bit. And if you look ever closely, you'll see that this low is this low on ES. This low is this low. And so NQ swept, it freshly swept the sell side liquidity and delivered out of the bullish gap and was at 10 a.m. when it closed over, right? It was like all the planets were in alignment, basically, with that bullish SMT and that inversion for a long. And it cooked. It died out into the afternoon. I'll be honest. It was tough to hold through this. It was something about, though, as you change through the time frames, there were a lot of just stacked highs and then almost like a consolidation of afternoon with a slight bit of low resistance liquidity run, or LRLR, where we just have no higher high than the previous. Notice how all these highs are just lower, 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 lower. So there's stop losses of people shorting this all above all these highs. So they were going to get run, whether with a candle or just a wick, and it was the wick, they were going to get run. So yesterday we had that crazy, what was it, Wednesday afternoon? Oh, no, it was earnings. Sorry, it wasn't any news. It was NVIDIA. And so it spiked up, but ended up being bearish, right? And I was able to catch profits right around here because I noticed we hit that high and we came just a little bit above it. And if you were looking on the 30-second, 15-second, it was dancing and was not making any higher momentum. So I was able and lucky enough to get out right near this high as well as it was coming back down. But that was a 3.8. So to me, anything over a 3.5 is, I would consider like a banger trade. So this would be a banger trade. Not a super banger trade, but a banger trade, 5-minute inverse. There was a time to get back in as well in the lunch period. Not the best time to go into a trade, but it did do a textbook lunch period liquidity run. You know, it did a stop run in that lunch hour. Here's noon. Look at noon to 1. Noon to 1. It just, it literally was just sweeping liquidity from longers that were lazy and got in late during lunch hour. So that was nice. You could have gotten in there. This would have been way too ballsy to do that. And we'll move on. So this was actually last night. I got into one trade first. So let me try to explain this one here. So first it was on the 5, I believe. Yeah. So I first saw this last night at the start of Asia. I really wanted to get into this. Lucky enough, though, as I saw us continue to sweep different time frame liquidity, I got in right before the pump, which resulted in a stop hunt back down to that start. So I was very close of going break even on this trade because it did enter the liquidity pool for me to go break even. So that would have been a break even trade. It didn't. And then off of open today was able to catch the TP there. Also caught an interim trade in here on other funded accounts. I think it was on the 15-minute. No, it was not that. It was not that. I think it was this 5 was in here somewhere. No. Excuse me. I gotta make this look good. Yeah, this 5. It was somewhere in here. Got back into a chase with other accounts. So there were 2 trades within this. One held all throughout the night. What went through with this trade? There was no bullish SMT, but we swept with the NVIDIA earnings. I would consider this a data candle. This is on the 5-minute, though. I want to show you when we zoom down to the 1-minute. This is where things get a little complicated. Where the hell am I? Okay. Shit. All right, so this is where things get a little bit complicated. Where the fuck are... Okay. So down here, the NVIDIA earnings was 1 candle up here. If you want, which I would consider 1 whole candle from the data, was this minute and this minute. And if you look down here, just by a little bit, we swept the sell side of the quote-unquote data low. So that was a sweep, whether you like it or not. And what that gave me confidence in was a long to target the high of that quote-unquote data candle, which is exactly where I had TP. I had TP on 685 because on MNQ, it was the high here was 685. And I didn't want price to go up and just get around, as it sometimes does, one of the other highs, and it doesn't do a full NQ or ES sweep. We've seen that sometimes. It does some bullshit, and it just by a tick or two, a couple points, it's just not, it doesn't hit TP. So I conservatively, instead of 689, did 685. But again, we swept the low. It was time to target the high. We had enough run down here. We also had pretty linear highs here. I felt like we were going to run all this. We had the momentum. And as we were just moving away, that's when I got into the trade. It was right in here. It was the close over the, it was the close over this bearish gap here is what confirmed it for me. And was it a little late? Yeah, it absolutely was. Could we have retraced all the way back down to the beginning of that on that 5-minute pump? Absolutely. But for me, I was confident enough with having swept the low that that was going to deliver and take out the data high. For this one, this was taken on the 32nd. All right, and this was right after all that stuff happened, there was a retracement, and I had a good feeling. Let me zoom out again. And I kept talking about it. Why do we have that gone? We had a lot of stacked highs here. See how just, again, linear this is? You could argue that this is LRLR as well, lower resistance liquidity run. We also had equal 4-hour highs here. So I was confident that the draw was, a V-shaped recovery that we had begun from the Jerome Powell, that we were bullish here, that we weren't going to come down yet, and that we had a chance of coming way up here. And so therefore, the 30-second was taken right here. I believe we had a massive bullish SMT, if I don't forget. This is London high. This is London low. Everyone see the London low? I won't put my cursor there, but right here, over here, is London low. See how this is London? That's 2 to 5 a.m. Eastern, right here, 2 a.m., 5 a.m. London low is here. Look at what happened with ES London low. My favorite scenario for the SMT. ES swept a ton of the sell side liquidity in London low. It left it. It acted bullishly. We stayed above. We delivered bullishly out of the bullish gap, right? So we came down, manipulated down again. You could call this like internal accumulation consolidation. We manipulated down. People thought, oh, it's time to short. No, we took out the sell side liquidity. We swept and then delivered bullishly. And I entered right here. Unfortunately, it retraced back down a little bit. I waited a second, but the close over this candle was the confirmation. This was your gap. Okay, so that's what I was looking for. I know it seems crazy. It comes down to just this on the 32nd, but that's your London low. There's your little sweep, and then it goes. You don't always get it. You don't, but we did get a little extra chance of getting back in, more so on ES than NQ on the 32nd, but then that one just it just took off, and I just wanted to take these internal highs. I played it really safe. Oh, wait a minute, this isn't right. It was 749. Oh God, I'll have to redo this one. 30-second long. I'm gonna have to figure out where I put this. Yeah, see how, because this is too low. I didn't do that. 7. It was like 6. Oh, fuck. 7. Because my this is crazy. The TP was 7, like 741 40. Yeah, right there. All right. Anyway, that was the 30-second long. Incredible bullish SMT ES swept. Pretty clear close over on the 32nd. Any questions there? Let's see. Feel better, yeah. All right. Samson, want to go over your trades?
Yeah, just give me 1 second. I'm uploading one of them right now.
No
And then I'll
worries.
review the ones
Oh, we're pumping here.
this week.
Took out the not yet. Ooh. Equal low, equal close there, not a close under, just equal. show more on SMTs. Yeah. I'll show you from a distance what this SMT looked like. Right here. These are the type of things I'm looking for. ES was running up, manipulated off of open, came down. There was a Judas swing. We went up, see the wick, up, came down, and went up to deliver. Manipulation here. People thought, oh, long. Nope, fuck you. Came down. People shot, oh, short. Nope, fuck you. Long was the distribution. The SMT itself was ES sweeping the London low, NQ not. And you can see the upward trend, the ascending and the descending. A lot of sell side liquidity swept all the way to here on ES. These lows were taken on ES. NQ stayed up here. It was very bullish. See this green gap here? Bullish. Acts as a trampoline. Price came down. Boom. Wick. Big wick. Took out all of this. Protected. I'm sorry. It was also a protected low. I would have stayed in this in my live account. I'm doing too much stuff at once. This is a swing low. See how this is a it's hard to see. There's too much pop-ups. But this candle, it's low right there. Then the lowest low, and then the higher low. This candle right here, it's low. So I'm sorry. This one. I'm so sorry. So there's your swing low. It's a swing low that takes out this swing low inside arguably the same fair value gap. Yeah, it dipped into that one, but on the hourly swing low, they're not really distanced. But yeah, I would still argue that that was a protected low play. So that was an extra confluence as well. Bullish SMT and protected low play. That's great. That's great. It's the sound of it. So a bullish SMT means we're gonna be going bullish. Bearish SMT means we're going short, where it's going down. It means like, so the bearish SMT means that we're sweeping buy side. Price is up and way premium. It swept a lot of buy side liquidity, BSL. And then we're looking for the reversal down to sell side. So that's your bearish SMT when you're up here. And then when we sweep the sell side and we're gonna deliver and go to longs, we're gonna look for longs. This is your bullish SMT.
I love you. I'm gonna do my trades from this week.
Yeah, sure. No, Matty, a bearish SMT on ES would be ES sweeping the buy side, NQ not quite up here, and then you'd be looking for shorts.
Okay, so I took a trade. Let's start with Monday. Okay, 20. Oh, this is the PM session. I'm tripping. Looking at 9, and I'm like, where the fuck is my trade? Okay. This one is in trade recaps. So yeah, this trade I took off of internal range sell side. We got a sweep. And I think for this one, we were delivering from like a higher time frame PD array. Was targeting this Where's my TP? 23,568.
Hang on, I'm not seeing your stream. I don't know why. I see it's there. Okay.
Yeah, I think this was a 5-minute swing high too. So this was my TP. All right, so let's get in the trade.
Can you see? Can everyone see? Samson, can you hear me?
So I entered off this right here, which was the first presented for value gap after market open. After that was suspected, we got a close above here, giving us the change in the state. And I think it was the 4-hour. Yeah, Monday, August 25th. Yeah, we were delivering from a 4-hour gap right here. So retraced, we got the total soup, soaked internal range sell side, delivering from a 4-hour gap, targeting buy side, which is a 5-minute wick high. Again, entered off the change of the state, first presented for value gap. We off entry, we got a push up and then wicked down really far, almost got stopped out. I didn't move my stop loss to break even because we didn't break this wick high yet. So almost hit my stop loss. Luckily, we reversed. I don't remember we got the bullish SMT there, but we started reversing. We got the macro. During macro time, we started pushing up. And then once we disrespected and closed above this wick high, I moved stop loss to break even. Because this is an internal range buy side. I moved stop loss to break even, risk free trade, almost got stopped out. We kept pushing up during macro. After macro, price started to get a little choppy. I don't know if you guys remember, I was in this trade for a while. We chopped around for a bit. TP got edged, pulled back. I had a lot of conviction in this trade, so I knew TP was going to get hit. And eventually it did get hit for a 1.31 to 1 RR, 70-point trade. Yeah. So that was Monday's trade. Let's get into Tuesday's. Tuesday, I took a loss. Yeah, I was right here. I entered off the internal range buy side. Let me look at a higher time frame. Because I don't remember exactly where we're delivering from, but I tried shorting. And yeah, okay, now I remember this trade. We're delivering from an hourly imbalance. Yeah, we're dealing from an hourly imbalance. We already took out Asia highs, so I was trying to catch a reversal off that because we had swing lows right here. We had London low, and we also had Asia low. So we had 3 swing lows exposed. Let me mark this out real quick. Asia high was taken, internal range buy side was taken. And then I think I scaled down. I scaled down to the 1 minute. No, it was a 30-second. Yeah, 100%. Okay. So I think I entered right here. We got the slight close below, getting the change in the state. We got the close below. We got the change in the state. So I wanted to see a push down at least to this sell side. And I honestly don't think this was a bad trade. We had 3 confluences in my favor, but it just looks like we wanted to keep bullish momentum. So I entered right there off the change of the state. 30-second inverse fair value gap. Very disrespecting bullish order flow, respecting bearish order flow. I think also on the 15-second, we had a continuation confluence. Yeah, we did. So we're also respecting bearish order flow on the 15-second. Second continuation confluence. So I think that also added extra conviction towards my short bias, kind of forming a market maker sell model. Unfortunately, after entry, we wicked down. And I was at least going to move stop loss to break even after this swing low was hit. But it looks like we just wanted to sweep this one and reverse off that. So we reversed, ended up getting stopped out for a 35-point loss. If this trade ran, it would have been a 1 to 8.1 RR. So yeah, sweep of Asia high, delivering from internal range buy side, getting swept. Also delivering from an hourly. We formed 30-second inverse fair value gap, changes the state, and 15-second continuation confluence. I would take this trade again. This is a trade I would take like 9 out of 10 times. And this is also just probability that didn't work in my favor. Still my fault because I entered the trade, but I think there was nothing wrong with my entry. Yeah. So that was an L on Tuesday. And then Wednesday, I didn't take any trades. And then I'll go over my trade today. Me and Levy took the same one. So this is my trade from today. Let's drop down to the 30-second. So my original entry was off of this 30-second inverse fair value gap right here. We closed bullish. I entered down here and I moved stop loss to break even once we closed above, forming the change of the state. After entry, off this 30-second, this whole trade would have been a 3.74 to 1 RR. Unfortunately, I got stopped out to break even because we closed above the change of the state. And then after I got stopped out to break even, I was going to leave the trade alone. But then we formed a 30-second inverse fair value gap. After retesting this 30-second inverse fair value gap too. So we came down, retested this 30-second. We closed bullish, forming another 30-second inverse fair value gap. And then on top of that, we also formed a 1-minute OB. Let's go to the 1 minute. And then once we formed this 1 minute order block right here, we got the close above. It was just money from there. I knew we wanted to push higher. We're delivering from internal range sell side, a bullish S&P, where ES had swept London low and NQ had not. Entered during macro, we got the push up. After macro time, we started consolidating for a bit. My stop loss was still down here, so my break even. This would have been my break even, but it didn't get hit. We reversed, pushed up higher, higher until we hit buy side, all for a 1.89 to 1 RR. Amazing trade. Took this with Levy today, and yeah. Appreciate it, Alan. Yeah. CISD is just a change in the state. Do you guys have any questions? So you type in Alan. So for your thought process, you definitely waited a little bit more in the smaller time frame to confirm your entry. Yeah, 100%. Usually when I'm entering on a smaller time frame, I want to see multiple confluences, at least off of entry 2 or 3. Obviously, it's going to be delivering from something. You know, your entries are always delivering from something, but you either want to see like a change in the state, a continuation confluence, or an inverse fair value gap. Just one of those 3 things. Usually, 2 or more confluences for an entry model is better than 1. Any more questions? So taking a trade is a better for 3 confirmed confluences, which helps determine your trade even more, like a staple, if that makes sense. Yeah, off entry, obviously, more confluences is just going to be better. But for me, entry models specifically, I like to have 2 confluences at least, whether that, but obviously anything higher than 2 is still better. You know, if you have 3 confluences, 4, 5, the more the better, and the more conviction you're going to have in the trade, and the more reasoning behind your trade. Do you guys have any trades you want to post and then I can review them?
Yeah, that'd be good.
So let's see the best number to go for confluences, or is it strong? Which one of the two? Three in total, yeah. But for entry model, you want at least two. But I would say two. If you're considering like delivering from a PD array, I would say two for the entry model, but three or more at least in total.
I'm gonna post a trade from FX replay, but I can't go back. It's all right. Do you remember which one it was? We can just go over it.
Yeah. Unless it's from like 2 years ago, then we can't. Month of July this year. Let's see. Do you remember the day? Levy, do you know how to go back to July?
Um,
You type it in.
yeah, at the bottom, on the bottom left, see where it has the time frames?
Oh yeah.
There's a little calendar.
Do you remember the day? Pretty sure around the 25th. Well, I can't even go that far back. So you know what? Do you guys have any stocks or long-term investment portfolio or like just any long-term investment stocks you want us to look at or like crypto or just anything you guys are questioning? The best stocks to invest in. I don't know too much. I'm not like too big on long-term investing, but obviously like the Nasdaq, the S&P 500. Someone told me about this stock called ALAP. One of my friends told me about it. Seems to be doing pretty good, so maybe throw some money in there. I think they work on a computer chip for NVIDIA. Like AI companies too. Those are good to invest in. S&P for long term is historically the safe option. Yes, sir. Levy, what are you investing in for long term?
I like the S&P. I like the Qs. If you like a little more volatility, the Qs are going to move a little bit more, but they grow a little more. So if you're going to, put that money there and you're willing to hold it a little bit more, longer, and you're willing to see the highs and lows happen, then QQQ is will outperform typically the S&P, and then you've got the Dow Jones as the least volatile. So if you really just want to put money, have it be safe, not worry about the volatility, be the Dow Jones. Away from equity, you could just do securities. You can just do bonds and stuff that if you want like a 4 or 5% solid return. But I know none of you want to do that. So probably, and what I do is a nice mix of like the Qs, a little S&P, which is also like I think the ticker is PRGFX. It's like a Vanguard fund or something. Individual stocks, but also keep in mind, I've been holding these for a while, would be like your Apple, Amazon, Costco, Google, Microsoft, Nvidia, Broadcom, Tesla. But that's heavily into the tech sector. Heavy, heavy, heavy. Tesla also is very volatile. Meta is also pretty volatile, and it's very near, all-time highs. Um, Around earnings, it gets really crazy meta because they just hold a lot of cash and then they get rid of it. So that throws off. It can be very bullish, very bearish with meta news. But Bitcoin, I also hold in crypto in general. I'm definitely foreseeing around 125, maybe not much higher. It's going to be a little correction, and that's right in line with September, October financial correction of like 10-15%, where we're going to see a little dip. Now given the time this year with crypto, with Bitcoin, we're hitting like that, and we've kind of broken through it, that double top stuff. And so historically in the past, we've hit those tops in 2021 where a price was around like 60,000, and then it hit that 64 for the first time, remember that, and then it dumped to 30. Right? It actually dumped to 29. It broke 30. And then same time that year, from March to November, it hit that high of that 69. Remember, that was that last all-time high that we remember from years ago. And then it plummeted down to 15. 15 in 2022. Boy, I wish I dumped money then. But what I'm seeing, and it could just be stepping up for a little while too, but I'm seeing that we're going to hit this top again some point up here in the premium range, 130, 135 tops. And I think we're due to a correction below 74, which was that last V-shaped recovery low. The absolute low was 74, 420. So I think there's a potential to come down and break that, get down into 66, and then if it really corrects Bitcoin, which I don't think it will, that would be a greater than 50% correction. I think there's so much institutional and major brokerage involvement that so many people are holding Bitcoin that there won't be that much of a correction. But I could be wrong. We could break 50, and that low there is at 49. So I personally I see Bitcoin going below 74. I think everyone should pretty much be just waiting for that, or at least till it breaks 100. 98 is also a low. Um, but yeah, that's pretty much where my long term port is. You know, Bitcoin, Ethereum, a little Cardano, um, XRP, and then Bitcoin. Um, and then I'm all stocks. I'm not like bonds or any cash bond securities. None of that. Just all stocks. Heavy in Apple. Um, yeah. What about anyone else? Anyone else have some diversified stock portfolios? No. Well, you'll start to grow some money on the side, and you'll be able to put money in. A good tip would be to, if you can, almost like a gym membership or something, just invest just $100 every month. Just $100, $100. Doesn't matter where the market is. Just every month you're injecting a little bit of money. You're catching different levels, and hopefully in this next fall, whatever, you'll get some nice discount prices of different assets, different equities, stocks. So I definitely advise that. You know, if you have cash, hold it. Start to trim some profits as we chip away at all-time highs here, because that is historically what the market wants to do. Samson, any long-term stocks?
Again, just really it's like the Nasdaq and S&P. I do have some crypto. One of them is called Aerodrome Finance, and I think they're also. Let me see. A buddy told me about it. I think Levy knows about it too. They've been pumping recently. It's at $1.21. I think earlier this year it was just at 28 cents. So there's like 100% return already. So they're basically like, I don't know too much about crypto, but they're a liquidity hub on Base. Um, I think it's just a platform where you could trade crypto on. But yeah, that's all I'm really holding. Aerodrome. I just have money in the S&P. Yep.
Cool. Very nice. I'll keep an eye on Aerodrome. Always interested in crypto. Any other ETFs, funds? Do you guys remember the Bitminer pump? I don't. Is XRP worth investing? Or is it hype? No, I think XRP is a good one because it's capped. It actually has a finite number of coins, and it's part of the payment processing. Um, so I think some banks countries are adopting XRP. That's why I made a little investment there. I have some XRP, not a lot. Definitely mostly holding Bitcoin. And I'll probably, yeah, take a little bit of trims, hold some cash at 125 because you can see there's some wicks on the weekly. There's just wicks just inching at 124, 125. Hasn't taken it yet. So I feel like some whales, some big crypto holders are going to want to cash out just a little bit, at least at 125. I think there'll be a solid pullback. BMNR. Oh yeah, that really pumped, huh? Wow. It was hovering around $5 and then went up to 150. Oh, but in the past it also pumped to 800 a share. Wow, this is crazy. Interesting. I'll keep my eye on Bitmine immersion tech. Apple's looking pretty healthy. Apple looks like it could keep bouncing and hit 235 again, and then it'll be on a little cruise up to 240. We'll see that hopefully. It'll be very nice. But let's see. For anyone like super new, who else is in here? Anyone need to know more terminology, vocab, like HDF, DOL, draw on liquidity, high time frame, anything like that confusing? Everyone understands one setup for life, A plus setup, Asia London sessions, the charts, how to take a trade, stop loss, break even. Um, order blocks, judging fair value gaps. That we want confluences. I think more the better. I think you should start with the beginner traders. Paper trading first, and then waiting for like 4 confluences. You can count being in discount. Being in the sell side of the range down here to go long. That's a confluence alone. So just being in discount going long, being in premium to go short. That's a confluence in itself, and then getting a protected low is a confluence. Getting an SMT is a confluence. Um, quick 3-candle IFEG is a confluence. And then exit, target points, having triple equal highs or double equal highs that are far apart, data highs, data lows, significant highs, like a London high inside of a gap. Yeah, SMT, smart money tool or smart money technique. BPR, balanced price range. That's just when we're seeing a trend upward in this case, and you're seeing order blocks and fair value gaps being respected, just normal order flow. This was not so much BPR, but you could say that in between this was fair value gap respected. Everyone understands accumulation, manipulation, distribution, the power of 3. The market likes to move from accumulation to manipulation, and then finally distribution. Distribution is the move that we're always looking for. Um, PDH, PDL, previous day high, previous day low. NWOG and DOG, new week or new day opening gaps. So the market, as you know, closes 5 to 6 p.m. On weekdays. when it opens back up at 6, if there's some like crazy gap, so like right here where the market opens again at 6, sometimes there's a new candle way down here. That would be a new day opening gap. And most of the time, those gaps will be filled pretty quickly. And if we run away from it, we might dip into it quickly and then run away from it, much like that um, bullish SMT where we dipped just into that London low by a few points. Um, this is nice. We're dumping. Yes. Yes. I may or may not have taken a short for science earlier. So that we'll see if that keeps going. I feel like price wants to come down, take this. We'll react off of this, probably head back up. So I did set TP at 717. 716 actually, sorry. 716 flat. Probably hopefully in here may come down. But yeah, I think we're bullish because again, just to do some TA here, we've got those stacked highs. We've got 4-hour equal highs here separated by 4-hour candles, two of them. I think this is a magnet in itself right here. So there's a strong chance that we can do a little recovery, finish this V-shaped recovery, power through this. It's going to take some news, some major news. So I don't think it'll happen in the next necessarily day or two. You know what's going to do it? If we get the right news for it next week. Is this the right week? Yeah. This week for NFP and unemployment claims at some point here in Jolt's job. If we can get some bullish news, we're going to run this. We'll have just a bullish candle. Something's going to happen. We'll take this out. That would be my prediction, but who knows? No one really knows. Nobody really knows. Any other vocab terms, patterns, and candles? Anything I've said on stream that doesn't make a lot of sense? The next class, what we're gonna do is I'll put together. Samson and I will have like it's called Kahoot or some type of interactive thing. So we'll have screenshots of setups, screenshots of just the charts, and they'll just be different questions. What is this? Is this a valid entry? Is this a valid setup? Is this an A plus setup? What's wrong with this? Why wouldn't you take this? And it's going to look like a perfect setup, but something will be wrong. And we'll put that together. I can work on it this weekend. I'll be pretty chill this weekend on the Cape. So I'll bring my laptop, start capturing some screenshots from the charts, and we can, yeah, we'll have that Kahoot ready. We'll have like a little multiple choice quiz. It'll be interactive. Everyone can give their answers. It'll be ranked, and so we'll know who needs to work on stuff a little more. You can be anonymous if you want. Other than that, we can do again more back testing, and then have a more structured class. Again, we can do a more advanced class again since we've kind of been moving along, so we can start to talk about a little more advanced stuff, a little more granular stuff, that things are looking good on the charts, but actually wouldn't take that trade, or we should wait for more further confirmation, something like that. Any other tips? I will say though that like next week for NFP, you definitely don't trade the day before NFP. Just as a reminder, um, not the ADP NFP, but the actual NFP. You'll see that on this Forex Factory. So not this one, ADP, actual non-farm employment change. That'll be Friday. And tomorrow, there's stuff, but not a whole lot. We've got something at 8:30. Maybe that'll do something, give us some volatility, but not a whole lot. Not a whole lot here. Um, Any other questions? Samson, anything else you want to discuss? More review?
No. Honestly, I think we're good. I mean, is there anything else you want to review?
Let me look at my notes. No, that's it. Just always remember to chart your daily range, 6 p.m. to current price highs and lows. Always remember keep in mind higher time frame order flow. So never try to trade against the draw on liquidity. So price might be moving in one direction, but if on a higher time frame we're in a bullish gap, we kind of wicked down, we filled it. We're probably going up for buy side IRL. So you wouldn't be wanting to short something like that, or especially in discount, you wouldn't want to be shorting that after lows have been swept. You wouldn't want to short that. So always make sure that you're in line with order flow, in line with higher time frame. Don't just be looking at the 1 minute, get stuck tunnel vision on the 30-second, the 1 minute, the 2 minute, the 3 minute. Always step back, look at the 15 minute again, look at the hourly, check the 4 hour. The daily and weeklies you don't have to check too often, but they're nice to see if you're entering different gaps or highs or lows are taken. Um, other than that, just remember to just not get into a trade unless you have clear targets. All right, getting out of the trade is just as important as getting in. Once you've moved stop loss to break even, don't move it out. Don't move it back into losses. That is the mechanics of the trade. If price is coming back down to your fill to the break even, let it hit the break even. You are a loser on that one trade. That doesn't mean you're a loser on the day or the week or in general. You have to accept losses here. You have to. All right. Remember the psychology with trading. So you can't have hopes when you're in losses, when you're in your stop loss and you're getting closer to just hitting stop loss. Do not drag it on further. Do not hope that price will reverse. Trading is about mitigating the losses and stopping the bleeding, stopping the losses. Okay? A break-even trade is considered a win, but a loss is a loss. And if you keep dragging stop loss, you're increasing the damages more and more. It was already going to be an unsuccessful trade. So the quicker you can be comfortable with understanding yourself, your psychology, that you will lose, you will not always win. There's no trader who has a 100% win rate. There is none. The
It doesn't
more,
exist.
yeah, the faster you'll be successful, because it's going to happen if it hasn't happened already. You're going to get into that trade. It's going to be moving. Oh my God, it stopped to break even. Yay, this is so great. It keeps going, but you quite haven't trimmed yet, or maybe you just trimmed that 1 micro or whatever. It's not enough. Obviously, we want to make as much money as possible in the shortest amount of time, but as price starts coming back down to your moved to stop loss break even fill price, you're gonna get that feeling. I need to stay in this trade. I it can't be wrong this time. It went up so high, but remember that the market owes you zero, and it could very easily. It's meant to. It's meant to come down and take you out. It has to be damn near perfect, the trade. So really relish and celebrate the successful trades when full TP hits. That's an amazing accomplishment. So we're going for that. We're aiming for that. Tomorrow, again, there's some yellow folder, but not a ton of volatility. So we're not gonna, size up. We're not gonna try to take any Hail Mary plays. Again, it's a Friday, so by 11:30, things are gonna start to fizzle down, unless there's some news or something I'm unaware of. But that's just typical. We're late August here. It's the summer. It's winding down. People want to go off to their beach houses and stuff on the Hamptons or whatever in New York. Those stock traders,
I was gonna say
yeah, they leave, and it's just the volume dies. Friday, 1 p.m., 2 p.m. There might be a trickle up to buy side further. Sometimes it just goes horizontal, and then 30 minutes later, 3:30 to 4, it's got some bullshit moves and stuff. you just stay out of that. You stay out of that. You hone in on your setup A plus so you can take the full size. You get your edge. You get your confidence. All right, because when you start taking bullshit trades, when you start moving stop loss, you're rewarding your psychology. You're telling yourself subliminally, subconsciously, this is okay to do. So next time I can do it again, and I can do it again. And you're building a terrible habit if you do that. So don't do that. Do not go full tilt. If you lose a trade, take a step back. Do not just go back into the trade unless you hear us like scrutinizingly analyzing the trade and it's appropriate. We've seen the confirmation. We're still continuing and we somehow just got stopped out, right? We'll analyze that live time. But if you take a loss, it's time for you to just, shake it off, get a glass of water, something, step outside, quick fresh air, 10-minute break, journal, write your feelings, your emotions, um, write why it went wrong, what happened. Did it end up going in your direction or did it hit where your stop loss was going to be if it hit break even, right? Was it an actual losing trade? And start to document that. Build some data of your own. That's important, right? One day you'll be doing this on your own, all by yourself. So, but not if you start doing the right things and building the right habits. It's so important. Like I can't say it enough. I'm gonna try to save you guys from putting holes in your walls and getting like seriously depressed or going crazy. Like people have gone bankrupt, people have gone crazy. I'm sure people have killed themselves from day trading.
Oh, for sure.
I'm
I've heard
sure I'm
stories.
sure people have jumped off of roofs or something because of
Bro,
day trading.
this shit, all because people can't manage the risk management in psychology. It's like people for real kill themselves over this shit, bro. It ruins people's lives. Like I've seen people go into not personally, but online. I've seen people go into just crazy amounts of credit card debt, just losing all their shit over day trading, and it's like it's a dangerous game if you don't know what you're doing. Like it can really fuck with your head. It can fuck with your emotions on a day-to-day basis. Like you can go into depression off this shit. But like on the other hand, on the other side of it, it's like it could give you the most beautiful life you could ever imagine. Like you don't have to work a job. You can make money from home. You can travel, do what you want, whenever you want. Yeah.
And eventually you disconnect, you disassociate from the money. One tip I do, if you're looking at the charts and it shows your trade, for me, it never shows the price, it shows ticks. I think that helps a lot to not actually know exactly at the moment. You can kind of do the math, but to not have it show the money, and you really want to disassociate, almost perceive the charts and what you're doing as you're playing a video game. And it's just,
Exactly.
yeah, and it's merely statistics, and you're playing a video game, and the ticks are just points, and you're trying to just gather as many points or coins or whatever you want to call them as possible, and you're leveraging those points as you go. It's a video game, and this is all like it is a simulation, almost like it's pretty wild. You'll start to see that and how it's just all connected to the world, this chart, and you'll be able soon. You will see it. You will see it in the charts. Samson had it, and I had it. Every successful trader gets it. That aha moment where, and I'm going to be honest with you guys. I've said this before. Some of you are new. I started just crying. I just started sobbing and crying in happiness because there was one night where I had a great trade. I did it all on my own, full TP, journaled it, was able to talk through it all, tell people about it, and insightfully dictate it word for word what happened. And it was just incredible. I didn't know if that day was ever going to come because I'll be honest, there's days where it's really gonna suck. I'd like to tell you where that day is gonna come or if the day won't come, and I hope it doesn't, but chances are you're gonna have a really shitty day trading. And how you make it from there is gonna determine probably your future as a day trader. You might, whether that is you blow all of your accounts at once on one trade by accident, all 10 or 20 Apex or whatever funded accounts, you blew your live account. Something's going to happen. And it's how you manage your emotions. And it could just be one huge loss on one account. You have to be able to manage that.
Yeah.
Okay.
It's basically like a canon event.
Yeah.
Kind of like you don't want it to happen, but most likely it's not going to happen. Or, I mean, it most likely it is going to happen, or it needs to happen in order for you to realize what you're doing wrong. But, yeah.
Yep. And you'll just start to gain a better and better understanding every day, every hour on the chart. Live time is the only place where you're really going to gain the experience as a trader, where you're going to start to understand yourself, your emotions chemically. What's happening as I'm seeing this on the charts? I'm getting this feeling. What is that? Oh, it's greed. Okay. All right. Well, I know that. So that's not what's going to fuel this trade now. Okay. So we're going to silence that voice on the shoulder. Or it's fear. Just as equally, if wanting to get into a trade, fear can also stop you. And I promise you, oh God, Samson knows this. There was a solid, like, oh fuck, it might have been like 3 months where I was really struggling. And it's not that I kept losing, it's that I wasn't trading. I would see the good trades. I would take some bad trades, and that also would fuck me up. But I would see the good trades and I wouldn't take them. Why? Because I was scared. I was scared to lose again. And I would rather at one point as a novice beginner trader, I was almost better and more comfortable not being in the trade than being in the trade. And so it took a long time. Samson knows. And I had to get over that. And so hopefully it's not that long for you, but there'll be that hurdle, and it happens. Most likely it happens when you go from eval to funded, and you've been paper trading, you've been eval trading, and now it's like, whoa, shit. Okay, now I've got this funded account. Now I can make real money. Now I've spent $150, $200 or whatever it is to activate this. There's real money on the line here. Shit matters. And some of you are going to be able to make that disconnect real quick. Some of you, it might take as long as me. Others, maybe longer. But I will say that you'll want to, as quickly as possible, get through that. And my best tip for that is to just manage your risk. So take the trade, take it with the smallest size possible in what's appropriate for you. So that might be getting started, just taking one little micro, but just getting into the trade, right? Don't force it. Make sure it's right, but don't let that fear stop you. Okay, and you'll know a good trade in the market is a hard trade. You'll learn that. The good trades are hard trades. It's tough when you get just a beautiful, easy A+ setup and things work, to your favor, and it's all, that was easy. We're done by 9:30, 10 a.m. Those are rare. So that's kind of my psychology lesson for tonight. I think that it was a little helpful. Um, Price is still slowly trickling down to this buy side IRL as we speak. We still have hours left of Asia session. But yes, I would say from the looks of this, price wants to trickle back a little further into sell side here and then maybe pop back up. We'll see. Again, ES took all-time highs, NQ has not. So there eventually will be that push. They're very uncorrelated right now. So ES is going to want to, sorry, NQ is going to want to snap up, follow through, or perhaps we'll have a nice bearish SMT. Let's see if there's anything else. So, anything, Samson? would also say,
I think we covered what we need to cover.
okay. Some other quick tips. I have these bullet points that I've always learned through failures. The higher time frame order flow, market structure changes, order flow does not. Okay, so realize that. You'll get caught up in a little trade, like I said earlier, wanting to long when the order flow is bearish. Don't do that. Don't do it. It's not worth it because that's not going to be the long trade. That's not the one that's going to work. That's not the distribution. Don't trade in the middle of a data candle. All right. When we get those big candles, there's a range. You don't want to trade inside of that fair value gap. You want to wait for a sell side or a buy side sweep first. Don't short back into a V-shaped recovery. So when we're getting those V-shaped recoveries, don't don't try to, that's a higher time frame one. But when you get a real V-shaped recovery, you don't want to try to short these because we are just trying to take the IRL, the buy side, right? Um, if we end up leaving and we're chopping around and leave a lot of relative equal highs, we did that recently. We're probably going to come back to that, like these, and chop and come down. There was a more blatant one somewhere recently. These, see these, like boom, chop, 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 boom, chop, 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 boom, chop, 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 and then we just absolutely destroyed these. That was textbook right there. Okay, those are your relative equal highs getting taken. Um, we can go into a breakdown of the three types of fair value gaps. You've got like the start of a V-shaped recovery, which is kind of like your worst kind, the opposite side of a curve. You've got your stop hunt fair value gaps, and then your breakaway IFVGs. So we can go over like those three fair value gaps in a next class with the cahoots and everything, and really quiz you guys, make sure everything is lock solid. And then of course, also don't forget your macros and the indicators that we have on our charts. So go into the FAQ section of the server and make sure you have these applied with the custom settings that I have. Your macros, that's the this one, ICT macros by Lux Algo. You're going to want to add at least the 950 1010 and the 1050 1110. Those 20-minute frames are where there's a lot of either just a huge boost of price action, a reversal. It can just be chopped too, but we like to understand, we like to be aware when we're entering macros. So that'll just put it on the chart so you never forget when you're getting into those macros, because we have a lot of different candles close at 10 a.m. Eastern. I guess that's it. We'll end for tonight. I don't think there's much else to go over. How is it again? Your charts follow each other's movements, trying to set up. Oh, how these are just stuck together. You just right click on this and you make sure that it's auto. These are the settings I have: auto, scale price, regular. But when you do that and it's like loose and you can move it, I think the auto lock is not there. So you just want to have, I think it's scale price chart here and scale price regular. That's it. So those are stuck together. And they move like that. Hopefully that helps with you, Blake. I'm pretty sure that is a feature. Yes, no, I think it just comes with it so that they're congruent. If no other questions, then we'll just peace out for tonight. Really nice class, pretty chill, conversational. We'll do another one Sunday or Monday, maybe both nights, but definitely Sunday or Monday. I'll have some quizzes, screenshots of setups, other things of like price action. I'm just going to ask you, is this good price action? Tons of different questions. I'll just come up with a bunch of shit. So we'll do that. Samson, if you have like a moment, maybe over the next few days, you can help me out a little bit.
Yeah, be down for sure.
Thank you
So
so
let
much.
me know. We can work on that.
So spread the word. We'll have a super nice class. I'll put some stories out, posts out to announce that. Hopefully we can get a nice big interactive class.
Yep.
Shoot for like 15, 20 people. That would be crazy. That'd be the biggest
Yeah.
class yet. All right, guys. Thank you so much, Samson. Thank you again for all your help.
Thank you, Levy, man. Amazing class. Thank you everyone for showing up. Uh, Peace.